you. Hey guys, thank you guys for jumping in on the August month, the SIH Capital monthly webinar series, August edition. Today we have Gary Lipsky. Super excited. I was on his podcast a couple of weeks back, have had multiple conversations with him. Really impressed that his core focus really is asset management. It's slowly becoming a sexier topic in the commercial real estate. For as long as I remember, it was all about capital raising and acquisitions, and no one ever talked about asset management. And then slowly now, I feel like that the quick exits are kind of going out the window with with the cap rates going up a little bit and the interest rates going up. That now people are like, oh wait, let's actually focus on asset management. What's that all about? And Gary, I think, is one of the leading experts in asset management. Wrote the best-selling book, Best in Class, co-written by Kyle Mitchell. I just finished the book this week. Really enjoyed it. Really enjoyed how approachable you made asset management. And asset management can be almost like underwriting, can seem really unapproachable when you first get started, because it's just overwhelming, because you just have this huge landscape you got to navigate. But really appreciated this book. I think all passive investors, even if you have no intentions of becoming an operator, should read this book, because this book has tons of great questions that you should be asking your operator before you invest in that next deal. So without giving away too much on Gary and what his mission is, I'm going to turn over to Gary to start the presentation. As always, we're going to have a Q&A, and then we'll have Gary will give his contact information for anybody that wants to reach out afterwards.
All right, thanks, Dennis. All right, so a little bit about who I am. President of Break a Day Capital, lifelong entrepreneur. I've invested in over 2,800 units. We currently have over 161 million in assets under management and 46 million in the pipeline. Like you said, co-author of the best-selling book. We also had the Asset Management Summit about a year ago, and we had over 1,100 people attend that online summit. Yeah, here's a picture of the Amazon best-selling book, the podcast in the lower left. I speak at a lot of different conferences. Spoke at MFIN Con in Charlotte in June, and at MFIN in Seattle a few weeks ago. And then coming up, I'm speaking at MFM, Multifamily Masters in Vegas. I think it's the first weekend of October. And then coincidentally enough, another real estate conference, August 14th and 15th in Vegas as well. I forget the name of that one. All right, so asset management is not property management. We typically we've always used a third-party property management company. Most people do on these bigger properties. They handle the day-to-day. We are handling really the 30,000-foot view, and that includes managing the manager, business plan execution, financial analysis, investor communications, curveballs, and disposition. So when we say manage the manager, for every property that we have a regional manager, and because we stay in one area, typically Tucson, we have one regional manager for all of our properties. We work with her on a weekly basis. We pretty much talk to her almost every day. But on Mondays, we have our property calls, and the property manager, the person that's on the site, is on that call every Monday. We have a very specific form they need to fill out ahead of time, so that we're asking questions based on the form, based on our analysis of that form. And so we're like I said, we're managing the manager. They're handling the day-to-day, and when you work with a third-party property management company, hopefully they've been in this business for many years. You're relying on their expertise, but they're not the owners. You're the owner of that property, and you've got to You know, keep a close eye on them. You got to trust but verify. There's got to be a team effort. And what we like to instill on our property management team is that ownership thinking. You know, it's one thing for them to kind of punch in at 9 and punch out at 5. But if you have a team that really cares about that property, they go that extra mile, and that extra mile is a huge differentiator from a property just kind of, you know, hanging out at, let's say, 91% occupied. You know, there's some trash on the ground. It's just kind of, you know, going okay. But a team that is really invested in your property, you might be at 97% occupied. The place is spotless. Everything is getting done great. And so that difference between 91 and 97% could mean, depending upon the size of your property, millions of dollars when you sell that property. So it's a huge differentiator. So business plan execution, what I mean by that is, you know, during your underwriting, you'll figure out what you need to do. So let's say typically, you know, we're going to paint the property, rebrand. You know, one of our properties, it was named Bella Vista. I don't know what Bella Vista is, but we changed it to Midtown on Seneca, which is a little bit cooler name. The street was Seneca, and it was in Midtown in Tucson. We also changed out the chiller lines. We updated the interior renovations. We added a barbecue area. We raised the rents, and that's all part of that business execution. And we actually initially weren't planning to paint the property, but because we had extra cash reserves in our CapEx that we didn't use, we were able to pivot and add that to our business plan. So we're constantly managing that business plan, constantly managing our expenditures on our CapEx. And that's what, you know, business plan execution is. As far as financial analysis, you know, we do to a lesser extent on a weekly basis. We see how the financials are, but really at the I would say the 10th of every month, we'll get the previous month's financials that we'll dive in and go through. And we go through every line item, quite honestly. There are mistakes that happen. A bookkeeper is entering this information, and then they make mistakes. They work with a lot of properties. We've caught mistakes in the past where they're assigning, it was like a $5,000 charge of something to our property, or payroll charge to our property by mistake. And if you don't go through the financials, you're not going to catch those things. And we were talking to our regional manager the other day, and she's like, no other owner goes through their financials like us, or even actually like looks at them, believe it or not. So really, really important to go through them. You really understand your property. You could find issues like you might have a property manager that is trying to make your financials look good and hold back invoices. And so, you know, a few months later, if you're on top of this, you know, you did X amount of work on your property, but if you're not seeing those invoices, that's a real problem. And instead of waiting, you know, 3 months later, and now all of a sudden you have $30, $50, $100,000 in invoices. So that financial analysis is so important. And if you're not really good with it, hire someone that can help you, or, you know, ask a lot of questions. But that's part of the job of an asset manager. Also, investor communication, sending out monthly newsletters to your investors, letting them know. And I think we have a sample in here, but you know, how we're performing actual to budget. If there's a problem, how we're fixing it. Monthly collections on rent. We give our investors everything they need to know to be well informed. So this saves us a lot of time, because investors aren't calling us wondering how the property is performing. They know exactly how it's performing because of our communication. We also have a CapEx tracker for people to see how we're spending the money and where we stand in that process. We'll upload financials to the investor portal on a quarterly basis. So that investor communication is so important. An asset manager also has to deal with curveballs. No one can plan for COVID or Texas freeze. Those things happen. Nothing goes perfectly, but you need to be able to problem solve and fix issues. You're not doing the day-to-day usually, particularly on a bigger property. That's the property management team, but you help guide them and also ask them for their experience. What are they doing at their other properties? And I mentioned pivoting earlier too. We painted that one property that we weren't expecting to. There's other times where we'll add something that we might not have planned from the beginning, but after owning it for a year, other things will come up and say, hey, this piece will add a lot more value to that property. So having plenty of cash reserves goes a long way. And then obviously when you're looking to sell, that disposition piece, usually you'll work with the same broker that brought you that deal, and there's just a lot of paperwork that goes back and forth, and he needs all that paperwork to get the best price for your deal, and then obviously seeing it all the way through with all the lawyers and then escrow and whatnot. It is a lot of work. We just sold a deal last Monday. We killed it on this deal. This was over 3x in under 20 months. So if you invested 100,000, you got over 300,000 back in under 20 months. So they don't come around often, but that's all part of disposition.
And Gary, can you shed some light on what about asset management before the acquisition? Because no one ever talks about, the due diligence. I know me and my partner, we found the sewer line, the grinder wasn't working, and my partner found it because he's very analytical. He was looking at the numbers and he said, why was this thing serviced 3 times? And something that small, but that would have been a $52,000 cost if we didn't catch it. And a lot of people don't talk, they skim over it, they say due diligence, but people don't really talk about how instrumental that that asset manager actually walking that property, going, and you're not going to catch everything, but catching those bigger ticket items. Can you shed some light on that?
Yeah. And really, so that's the underwriting piece is so critical. I think a lot of operators out there, they're chasing, the highest IRR that they can promise to investors. And, if you're an investor, bet on the jockey, bet on the operator, don't bet on the IRR. You're better off investing with a strong operator with a little less IRR promised to you, because one, they'll mostly beat it and they'll protect your downside risk versus someone that doesn't have that experience. But that due diligence piece, we always have lots of extras in CapEx for plumbing, HVAC, electrical, because things break down all the time. You can't even if it looked perfect, something may come up and that's a problem. But yeah, you've got to do a very thorough inspection. We bring out, a roofer, an electrician, a plumber, we scope the lines. There's all these different things that we do to make sure that we're getting the best picture of the property, and hopefully there are no surprises. Anything big, then you can go back to the seller. Anything small, you really can't. You've got to be able to have that in your CapEx budget. But it's so critical. I mean, like you said, with your partner, that's a good eye to be able to spot that, and that's important to look at the financials beforehand and ask a lot of questions. It's all about discovery, and so you have a very limited time to find anything that's wrong with that property, and you've got to make the best out of that time before your money goes hard, or without having too much money go hard. So asset management, a good asset manager can make a good deal great and a bad deal good. So like I said, that betting on that jockey is so important. if that person doesn't have a ton of experience operating real estate before, do they have a lot of business experience? And was that business successful? Because as an asset manager or as an owner operator, running a property is like running a business. You've got, essentially employees, the property management team that don't necessarily report to you, but you still have to inspire. You have to get the best out of them. You have to go through the financials, know your numbers, and you're constantly looking for improvements along the way. You also need to see issues before they happen. I know 3 months from now, I'm going to have 10 leases that are up because I can look at the rent roll. I don't need to wait till that month to know that. And so if the normal months are 5 months and 5 leases are up and 1 month has 10 leases that are up, then I'm going to address that way beforehand. So it's not an issue. So I don't have too many units to turn at one time or too many leases that are up, and now I have too much vacancy. So a good asset manager is going to see issues before they happen, and a good asset manager will protect investors' capital, and that's raising extra money, having that reserve money. You don't want to be in a situation where they have to do a capital call and you have to come up with more money. That is not a good situation for anyone. So protecting investors' capital should be the asset manager's number one job. We got a question here. Let's see.
Gary, I can monitor the questions. Let me see.
Okay.
So I'll. Do you have a horror story about one of your assets that you can tell us about? Let's get to the. You want to get it to the questions now? Or you want to save them to the end?
We can say
and we
that
can just roll them out. Yeah. And it'll give you some time to think of a really good one. All right.
So asset management tips and tricks. So we do property visits on a consistent basis. So on that panel you were talking about earlier, one of the people were saying, hey, on a stabilized property, they might see it every 3 months, every 4 months, or even longer. I'm like, that's not good for us. We want to be there once a month at least. We want to do surprise visits. We don't always tell them that we're coming. We want to see how it looks without them expecting us there. We want to drive it at night, and that's another thing you should do. But before you buy a property, drive that property at night to see, hey, is there actually more crime than you thought? Is it well lit? The very, very important things that you'll see at night that you won't necessarily see at during the day. Also, I talked about weekly calls with the weekly reports with the property management team. Just because your property is performing well, don't avoid those calls. And we always do Zoom so we can see each other. There's definitely things that come out by having it on Zoom versus on a call. A call, you're like, I'm just going to get off in 2 minutes, and a Zoom is going to be a little bit longer. You could build rapport with your team as well. So very important. You want to make sure you have access to their property management software, and I don't know, there's like 5 or 7 different softwares out there, but you definitely want to have access so you can pull reports at any time to make sure what they're telling you is correct. Those monthly reports, like I said, you want to go through them. You've got the general ledger, the P&L, the balance sheet, the actual versus budget, all these different things. I mean, it's a very big report that you need to go through and carefully analyze and make sure you're on track. And then you want to secret shop. So what we'll do is, my assistant will call and pretend she's a renter. She'll do it via email. She'll do it in a bunch of different ways to see how fast they respond. Do they answer her questions? And we have a rating system too to make sure that they are doing a good job. And if they're not, then we kind of go through and say, hey, this is how we're grading you. We're going to continue to secret shop. This is what we expect. And hopefully their score rises. If it doesn't, then that's something we need to talk to the regional about, but about potentially replacing that person if they can't if they can't respond well to customers, future residents, then that's a real problem. Leasing is so critical to your property.
And Gary, it's interesting. Some of these GP teams out there are really large, right? Because sometimes, they're just really capital raising. But it's ironic that if you talk to the operator, be like, well, how many times are you going to go on site? You have 7 GPs. And they're like, oh, we go quarterly or something like that. I'm like, you have 7 GPs. You can't send, you should be at least rotating once a week at that point. Because what is it? If you're a GP on that team, you're going out there once every 2 months. That's really not much, but there's no correlation between a large GP team and actually going on site, even though you assume it. That's why it's important to actually ask them, so how many times do you go on site? What's your latest property? How many times have you actually visited that property? And you can catch them off guard and they'll be a little bit more candid with you.
Yeah, and those large GP teams, most of those people are just capital raisers that have no idea about the deal. They have zero insight. They knew the person, they're going to raise some money typically, and that's or they have one task, but they don't really know the deal well. You want to make sure you're investing with the person that's running the show versus necessarily a capital raiser. All right, so map. You want to measure everything. You don't want to let's say for units. Oh, we're at 92% leased. We're not high enough to raise rents. Well, you want to break everything down, because one unit type might be almost 100% occupied, so you can raise those rents, and one unit type might be maybe 80%. So then you tweak that rent and lower that $15. But that arbitrage of knowing which is very high occupied and what isn't potentially can really put extra money in your pocket, which is what you want. You also want to, like I said, break everything down. So as far as where your leases are coming from, you want to see if it's apartment list or rent.com, whatever it is, it's not how many visits that you're getting, but how many actually turn into leases. So you want to measure that all across the way. Accountability is really important, and I'll show you an accountability sheet we have. One of our properties, one of our first properties, we had someone we really liked that was working there, but at the end of the day, she wasn't holding her team accountable, and she wasn't accountable, and we kind of waited too long to let go of her, and having good accountability measures in place would have helped us a little bit better at that time. So making sure your team has accountability and making sure you're proactive. Don't wait for issues to happen. Like I said, with the lease expirations, if we know a unit is going to be vacated and needs a renovation, heck, we should have all those materials ahead of time ready to go. The team should know exactly when that person is leaving, and we're always trying to reduce timelines. Time is money. So if we can get it fixed up in 2.5 weeks versus 4.5 weeks, we just got 2 extra weeks of rent. And if rent is $1,000, you just made $500. Multiply that times 100 units, that's a significant amount of money that you made just by being a bit proactive. So very important. All right, so tracking doesn't have to cost a lot of money. Google Drive is free, and we do our weekly reports on there, and it's on one form, I guess, and then you've got all these different sheets, so I can look back 3 months, 6 months, whatever, and see where we stood at any one point, and that's really helpful. And then we have our accountability tracker on that as well, so everyone can see it. And so if you leave a meeting and you forget, you just go back and check it out. We've also used the Trello board before for our CapEx projects, and this way, the people working on the project can move the tile over, based on, are they when they're going to start work to what's been done, and move it along so we can go at any time and visualize it and see where we're at. And you got your CapEx tracker, and then obviously you want to track your KPIs, your occupancy, money collected. You could track, lease out changes over time. There's so many ways, so many different KPIs, but very, very important to check them on a continual basis. All right, so this is how we hold our team accountable. So we've got the project and task in the first column, the details of that task, who is responsible, and you'll see this Matt's name a lot. He's the property manager, and so most of it's on him. The target completion date, and then the actual completion date. So, if we have a call on Monday, they know they better get this stuff done before that call, because they're not gonna look too good if we've had that call and it's been on the sheet a week or two, whatever it is, when that's due. So this helps get things done because everyone can see it and access it at any time.
And Gary, is it on that previous sheet you had July renewals and you're working them mid-April?
Yep.
Is that your benchmark? You guys like to do it, 3 months out basically, and if they're not renewing at that point, basically you're putting them down on a a timeline where probably like 30 days before they actually move out, you already have the construction plan in place to flip that unit and start securing rental apps and everything like that, correct?
Yeah, we like to send renewals 3 months out. Not everyone will respond, even come June 30th. Not everyone will respond, but at least we have a good idea of where we'll be, and we know, should we be increasing rents or not, based on how that will influence. If everyone is moving out, then maybe we are a little bit more conservative on pushing rent. But if everyone is staying, then hey, we're going to be a lot more aggressive on pushing rent. So it's just more information that we can have ahead of time, and that being that proactive. So this is our main CapEx tracker. We have a couple sheets that fill into this, and our investors see this as well. We have it on the Google Drive. So something like interior unit renovations. It's an ongoing project. This is our budget, how much we spent, and that's the difference. And obviously, this is a little bit more in the beginning of this, and when we purchase this property, all the different projects that we have going on, and it totals it up. And we had a big savings, and that's when we started doing the paint and whatnot for this property. But you want to make sure, because if you're not keeping track and you go over, then you're screwed. Now you're going to have to take cash flow. You might have to do a capital call. You might have to put in your own money. So it's very important that you have a lot of buffer in here and you're keeping track.
And Gary, how often are you updating this for the investors?
We have every month. Whenever we send out our newsletter, we have it, because we want to keep track of it ourselves anyway. So it's just a link in our newsletter that they can check at any time.
I love it. I don't think I've seen this done by any other operator. This is really cool.
Okay. And so some of the sheets that feed into it is interior rehabs. We just track every unit type, what the work was done, how much it cost. Some units are just basic turns, and some are going to be a lot more work. And so we track that. For exterior rehabs, you have it's more about invoices versus all, because someone on the interior rehab, it could be one invoice with 10 units, but this here we break down the exterior work, because one job might be just one invoice, other jobs might be 4 invoices, whatever. So we track that as well. Here's one of our KPIs. So this is how we're looking at units that are available. So if we look at row A 471A2R1, a bit of a mouthful, but there's 4 units and 2 are not leased. So that's 50%. So that's not a huge um, amount of units to look at, but obviously something's going on there. So because all these other ones are, the max is 12.5, I have a lot of 0 vacancy, or 6.7. So I want to understand what is going on with those 2 units. Are they in a bad location? Is there a bad resident in that location? What's going on there? So I can look at the percentage and kind of see what is going on there versus looking at all of it as a whole. Because as a whole, we're only 6.2% vacant. That's pretty good. So I'm going to be aggressive on a lot of these unit types, but on this unit type, I might need to back off, $15. And if that doesn't work, then I back it off a little bit more. That's why it's always important to break, like I said, measure everything and break it down to its simplest form.
Gary, in terms of unit composition, do you guys have a certain unit style that you guys just love, and versus a unit style that you guys hate? Like, I do not like studios or 1-bedrooms. Personally, not a fan of 1-bedrooms. But just curious on your end, I know you got a great pulse on the Arizona market. So is there any unit sizes you prefer over ones that you don't prefer?
I just prefer a nice mix. So our first property was like half studios and half 1-bedrooms. I wouldn't say I'd want to go for that now, but at that, we paid $37 a door for that property. So, it was just a really good deal, and we did really well with it. Certainly, we like 1-bedrooms. 1-bedrooms, on average, let's say we can get like 1,100, and 2-bedrooms we can get like 1,300. The spread isn't that big. So particularly now with rents going up in a lot of cities, you're gonna see people moving into smaller, like 1-bedroom types. They might be in if a group is in a 3-bedroom, they might go down to a 2-bedroom, a 2-bedroom down to 1-bedroom, just to be able to afford the rent. But a nice unit mix. The bigger the units, the 2s and 3s, the longer they tend to stay because they're families. So it's, just having that mix is really valuable for when people are touring your property.
Got it.
Yeah. So here we look at traffic conversion. We've got tons of traffic from Apartment Guide. We've got 208, let's say leads, but only 4 move-ins. That's a 1.9% conversion ratio. And then you've got Craigslist with only 16 leads, but 4 move-ins as well, and that's a 25% conversion. So I would try to double down on Craigslist to get a bigger size to look at, but that conversion rate is the more important thing versus how much traffic. Maybe you're getting bad leads here. Maybe we on this property we don't take Section 8, and a lot of Section 8 people are coming to checking that out. So this gives us a lot of information and is able to adjust our marketing based on that. All right, so I talked about being proactive. I mean, hey, that goes for everything in life. You want to be proactive, and this way that when things go bad, because it doesn't always go well all the time. You can be ahead of the game. You can not only survive but thrive because you're proactive. You want to be able to measure everything. You need that CapEx tracker. You need to keep track of your expenses and really set good expectations with your property management team before you take over. No one knows where the bar is at unless you explain it to them. So if you set that up ahead of time, you're going to get a lot more out of your team. And it starts, right after DD, the real asset management. Certainly, you're part of the DD piece, but once you take over, then the real asset management begins. So lastly, know your sponsors. Make sure they talk about asset management when they're pitching the deal, and that they really understand the work that's involved and who's the point person. You can't have 7 asset managers. You can only have 1 or 2. So make sure that that's the case. You want to understand how the asset is managed. We talked about how many tours they're doing. Are they secret shopping it? It's very, very important. What kind of communication they're sending to you as an investor, and how quickly they follow up too. Just if you reach out to them, you give them a call, give them an email. Is it going to take 8 hours? Is it going to take 24 hours, 48? Which is reasonable, but is it going to be a week, 2 weeks, 3 weeks? I mean, I've invested in other people's deals, and man, they're very, very slow to get back to me. And I'm like, I will never invest with you again. This is ridiculous. You're not giving me all the information, and I have to chase you down, and you're not returning my call. Like, this is BS. And you want to fully understand their business plan, make sure that they're executing it. Like, you, as an investor, you could tell by what they're communicating to you. Are they ahead of plan, behind plan? Are they just threw the plan out the window? Very important.
And Gary, I'd also add on to business plan simplicity, right? Sometimes I call it like the levers. Like, how many levers do you need to pull to make that business plan work? Once you need 8 to 10 levers pulled, I was like, that is not a good deal, because like the chances that you got 10 things, you want 1, 2, 3 levers pulled and the deal is working. And then if you get the other levers, that's great. But like some of these deals I see, and it's like, and then how heavy of a lever are they pulling? You know what I mean? So I like to always tell other investors, like, you can look at other people's deals, absolutely. Just look at the simplicity of the business plan, because you don't need to be here 20 years to actually be able to have some basic business to be like, does this make sense to you? And if it doesn't, then it's probably not a good deal for you to invest in.
Yeah, the property management team can only handle a couple levers at a time anyway, so once you get things done, you can move on to some other things. But yeah, you can't, they can't do everything all at once. It takes time. So having a few levers, big levers, that goes a long way. All right, so if you'd like to stay in touch with me or get any more information, you can go to our website. Here's our YouTube page. That's my email, and I'm happy to answer any questions you may have.
So we'll start with Gary. First off, thank you so much. I absolutely love that asset management is starting to get some traction out there. It is such a critical part, and I think it's going to be the next 3 years as these deals aren't exiting as quick. I think it's going to get more and more important, and there's going to be like almost like the tide coming out, and you're going to see the people that don't have asset managers. And I've been in deals where you could clearly tell like that asset management is missing, or that they have one asset manager and they got 8 properties, and it's just not working out, whatever it is. So asset management is super, super critical. So thank you for coming on and actually, talking about this topic. Just first of all, I just wanted to thank you for that.
Yeah, you're welcome.
All right. So Devin is a great investor of ours. Good question, I guess. Do you have a horror story about one of your assets that you can tell us about?
Yeah, thankfully, I've never had a real horror story. I've had struggles. Nothing goes perfectly. We've had one guy die on our property, drug overdose. That happens. You do enough deals like that, that happens. We took over one of our properties November, just before COVID hit. So what happened there was the property just got rougher. We couldn't get some of the bad tenants out for a little bit. We invest in Arizona, so it's landlord friendly. So eventually we were able to get some people out, but we were definitely slow on executing our business plan in the beginning because of COVID. More people were staying. We had a lot more crime on the property, so we installed cameras. We had to get security on the property. And then eventually we started, as we started getting people out, we were able to really move the rents quite a bit up there. And we sold the property for 2x in under 2 years. So, you just hang in there, keep making progress, keep dealing with the issues. And then you see the light at the end of this tunnel. And, we were, like I said, we were able to increase rents dramatically and increase occupancy. And this was, we went through some staff there. This is the one property where we had to let someone go. The property manager was kind of lying to us. She said she was doing things, and we would pop in, and she wasn't. And that was unfortunate. But we got a new property manager, and I got her into ownership thinking. I knew she was from Kansas City and a big Chiefs fan. Another GP on the deal was a Raiders fan. So I was teasing her one day, like, hey, if you get close to 100% occupancy, he's going to have to wear a Chiefs shirt. And our occupancy went like skyrocketed within like 3 weeks. She got it up to like 100%. And like no amount of money could have gotten her to like be motivated that quickly. And so the next time we visited, we took a picture with him wearing the Chiefs shirt. And this was just a lot of fun we had for like months. And certainly we gave her like a really nice a bonus for that. But it made us so much money just because she was motivated. It really wasn't about money. It was like just us having fun, And so you've got to find those little ways to like motivate your team and connect with them,
I thought you were gonna say something like getting her season tickets. Getting a GP to wear a shirt. You got off cheap on that one.
Yeah, we did.
Do you ever, besides actual financial bonuses, do you ever give equity bonuses if a property manager just knocks it out? Like, because I'm curious of what other ways besides the financial bonus, and do you pass on that ownership mentality?
We've never done that before. I don't know if too many people are, so maybe that could be a huge difference maker. I don't know, but we've never gone that route. We've done like exit bonuses. If you stay on to the end, you get, let's say, $5,000 or whatever. That's really helpful because you don't want your staff to all leave while you're trying to keep it running well. If your property starts going sideways, and the lender finds out about it, then they could hold back proceeds or and really screw up your buyer, and then you obviously you can't get the sale. So you want to make sure it continues to run really well up until the moment you sell that property.
Got it. Okay, I got some other questions for you. My partner actually sent this. He's the asset manager in our group. He's the geek. So let me see which ones we haven't handled. What are some of the most expensive lessons you learned, I guess, over your decades of experience?
I mean, we luckily, knock on wood, we've done very well. We haven't had too many bad lessons, but check the contracts really well. There might be stuff in there. Those contracts, they're so hard to read. It's like 40 pages, and you definitely skip stuff. So you want to have a couple different eyes on there. You might want to read it a second time. So on a deal that we just sold, there was in there, they got a piece of the action on, let's say, the laundry contract and the cable bill. But the reality is we never got that money from when we bought the property. It was from the previous owner. So what could have been a $35,000 hit to us at the sale, not huge amount of money based on a $28 million sale. Luckily, we hadn't caught that originally. It was in the fine print, but we didn't get any money when we bought the property, so we did not have to give them that piece of the action. What other lessons? Like I said, really set those expectations up from the beginning with your staff. Just because you like someone, and they're not doing a good job, you want to have a second talk to them and hold them accountable. And if it's still not making sense, then don't wait. It's not going to improve by itself. You need to go in a different direction. But like I said, give someone a chance. Talk to them a second time, and if not, then make that change. Don't wait, because your property is sliding back further than you realize. Because a lot of little things aren't getting done, and it'll start showing up after you fire that person. The new property manager will go, "Oh, I found these invoices," or no, that unit she gave a deal to someone, and like there's just little weird things that happen, or promises. Tenants say, "Oh, he promised me so and so," and we're like, "Show me that in the lease." We bought a property, a student property, and they're like, "Oh, you get a birthday month free," and we're like, "Are you kidding me? A birthday month free of rent?" And believe it or not, it was in a lease.
Wow.
Yeah, just one. Other people claimed it, but it was in one of the leases, and we're like, "Yeah, that's not happening." Crazy things will happen, but nothing. Nothing major, thankfully.
Gotcha. This is a good one. Have you noticed any property management goals that conflict with how you want to operate your property?
Yeah, that's a good question. You wanna understand their incentive program, because they could be incentivizing something else. And so the team focuses on that. So let's say leases, if they're focusing on leases, because maybe the property management contract has a bonus in there. But at the end of the day, as an owner operator, you want them focusing on, quite honestly, NOI, or the value of your property, because that has a 360-degree look, and that's getting work orders done. It's retention of staff. You want to retention of residents. You want to reduce all costs, not to the detriment of the property, and you want to be having them thinking about pushing rents themselves as well. And so that's a motivator, versus it could just be on one silly thing that's not helping the overall performance of your property.
Got it. We'll do until the top of the hour, and then we'll call it. How do you handle the bookkeeping on your properties? Is it all done through the PM?
Yeah, they'll handle it, and we'll go over it, like I said, on a monthly basis. We'll check, balance sheet, cash flow, everything we'll check to make sure it's right. I don't think I've ever not corrected one thing. There's usually something that I need to change, or there's not enough information there. So it's really important that you go through it with a fine-tooth comb.
Is your property management company charging you extra, or is that built in to your property management fee?
So I take a 2% asset management fee, and they take typically a 3% fee. If it's a small property, like I have 172 unit, they get 4%. And then I also pay for on-site staff as well.
But the bookkeeping fee is in that 3 to 4, or
Yeah,
they charge you separately?
No, it's in there.
Okay, because recently our property manager is trying to break it out and then charge you on top of it. So we're going through that fun stuff right now.
Yeah, I've seen others do it as well. It all depends on all the different fees that you're paying. So you just gotta check with that.
Okay. Have you done any distressed properties? And if so, how did you handle the asset management versus? And it sounded like you were telling the story earlier about the property COVID and not being able to evict. But was that your most distressed property that you guys took over?
I mean, it was a C class in an area that was getting better. I wouldn't say it was that distressed. It was a solid C. We had another property that had about 50% Section 8, and in the beginning, we definitely had fights. We had some drugs. We had some guns on the property. It was definitely rougher than we thought. We were able to reduce the Section 8 down to like 20% over time. We got some of the bad character, really all of the bad actors out after a while. And that was a deal we did over 3x on, like we were able to raise rents and made it a really nice property. I wouldn't necessarily call that distressed because it wasn't a D. It was still a C, but you just got to be real careful. I mean, there's a lot of people that make good money on those distressed assets, but are you going to have staff that stay and not get burnt out? And is it dangerous for them? You've got to be very careful. Do you want to own something like that? And I certainly don't want to. So you just got to figure out what you want to do. What's your thesis as a operator?
So it's an interesting question because we're looking at a property that out of 92 units, there's only 16 occupied, but the OM is saying 69% occupied.
Wow.
So it's going to be an interesting couple of walkthroughs. But the question, I guess, to you is: would you prefer a vacant building, or higher occupancy with the chances of, like, we're talking about distress? I'm not talking about stabilized,
Right.
90%. Would you prefer, let's say, 50 to 60% occupied, but you're going to have to evict probably half of those people, or super low occupancy and you could just focus on leasing and getting them ready and going? Which one would you prefer?
Yeah, if I had to choose between the two, I'd rather it vacant and not have to deal, because it's harder to lease up when you have a lot of bad people on the property and legal fees, and they're not paying anyway. So just start with a blank canvas, and you could just focus on getting leased up versus having to get the bad apples out of there.
Yeah, no, definitely a great point. All right, I think.
However, on the lending
yeah,
side, it might be easier,
easier,
to
exactly.
have like the mirage of having those extra people in there. But there's loans for everything, and you can refinance. So, I'd like a blank canvas.
It's actually been comical getting some of the feedback from lenders where they're like, "Oh no, 69% in today's environment, we're not even touching." I was like, wait till they see the actual numbers.
Right.
It's gonna be really. I was like, wow, this is like one of those deals where we think it's gonna be like a 2-3x if with the right plan. So we're like, all right, it's got hair, like tons of hair, but to see some of the OM feedback is like, okay, this is actually kind of comical because they're like, no, we can't touch this at 69. I was like, wait till they see 12% occupied.
Right.
But Gary, thank you so much for your time. You've been super generous. I don't think there's any other questions there. I want to, once again, Gary's sharing his contact information. Make sure you get the book. It's on Amazon, best in class. He co-wrote it with Kyle Mitchell. Passive investors, they don't do this enough, actually getting into the nitty gritty. Yeah, operators are really good marketers. They do that. That's kind of their de facto job. But what separates, a good operator from a bad operator really is the systems in place, what's behind it, and asset management is such a key role there. Read the book. Like I always say, I always recommend Brian Burke's book when it comes to underwriting, because he gives you tons of great questions to ask a operator. Same thing with this book. Gives you tons of great questions to ask the operator. What property management software? Are you using first party? Are you using your own property management? Are you using third party? Are they, do they have the right KPIs? Ask them, what are your KPIs with your property management? Like, it should be a really good conversation, and your operators should respect that you are knowledgeable enough to actually ask those questions. And if you see And this is where Gary talked about the communication. If you see that the operator is turned off, because some operators are turned off by, you know, a educated, knowledgeable investor, because they just want an easy check because they told them, hey, we did a, you know, 1.8x, and they just focused on the returns, and they don't want to answer the nitty gritty. And I remember as an LP, I would hate it, Gary. I used to spend an hour sending you an email based on feedback that I spent going through your OM, and they would just not even respond after that, because I guess they would label me as a trouble, you know, as an investor that's not worth it, because some people will have a good conversation and write out the check and that's it. So reading these type of books makes you more dangerous. You ask the right, and you'll ask the right questions, and you know, the chances of you being in a successful deal will increase just from that.
Absolutely.
So Gary, any you know, one last time, just, you know, say where you can find you, and we'll sign off.
Yeah. So go to my website, breakupdaycapital.com. You can book a call. You can get our investor list. We have, you know, you can get access to the podcast that we do. So lots of different resources. And thanks for having me, Dennis.